There is an old saying that you want to sell when you don't have to sell. Today, and for the next several days, there will be people, there will be hedge funds, there will be institutions that have to sell. Why? Because they have leveraged up. They have borrowed upon their portfolio to buy more stock, to buy more stock, to buy more stock. Where are the markets now, and where might they be going? First, let me introduce myself. I am Bagger Don at StockMarketCaddie.com, CADDIE. Today is Friday, April 4th at about 7:44 a.m. The markets are panic selling. You can see it here. On a daily basis, they are panicking. The VIX is in euphoria. Now, a lot of the stock pimps out there are telling folks, don't sell. It's never a good idea to sell in panic. Well, we're not going to say that or give anyone specific instruction. We're not going to do that. Because the truth of the matter is, nobody can say for certain just how low these markets are going to go. When the 9/11 towers got hit, over the intercom, there was a recording that said everything was fine. To go back to the cubicles, everything wasn't fine. I reminded my wife Susan, even back then, God forbid we are ever in an environment of panic, of mass hysteria. We will gather our thoughts, we will gather our experience, and we will make a sober decision quickly and take action. The truth of the matter is, the VIX went long 27 days ago. That was a warning to all of our monthly members, the annual members that have this tool on their desktop, that something was wrong and that fear was creeping into the market. At that time, most of the millions of individuals and billions and trillions of dollars, not many cared. The S&P futures contract went short 29 days ago, 2 days before this confirmed the fear. The percentage return from the signal price to where we are today, some 1,000 points, is nearly 13%. Now, in a futures contract, if one had shorted a futures contract, yes, they could have hedged a long-only portfolio of some 38,000, just one. A micro would have been 3,800. Of course, if they did 10, it would have been 380 grand. An aggressive trader could be profiting from that. It's the nature of markets. That although we're in panic, can we go down 15, 20, 30, 40, 50% over time? We absolutely could. It's possible. The NASDAQ, you can see the amount of money that it's up, but the percentage that it could have saved you, this signal, some 16% from that signal price. The Dow, 10%. The Russell, 20%. The Russell fully into bear market territory. Bear market territory is 20%. So no, it's never a good idea to act impulsively when everyone is panicking around you. But by the same token, when those little hairs on the back of your neck stand up, They're there for a reason. I want to show you a perspective on this bubble. This area right here, this is a monthly chart of the S&P 500. This line right here, let me draw it for us. Do you see this? This is the .com in 2000. The NASDAQ was at 5,000. 9 months later, 9 short months later, the NASDAQ was down 90%. This is the worst market crash ever, they told us. This is 2008. So we had a slow grind up. Took years, took several years. And then we were down 70 or 80% here. We didn't take these highs out until right about here, which was some 10 years later. But not with the same stocks. Lucent, Sun Micro, America Online, a lot of those stocks went away. More stocks went away. Countrywide Financial and Lending Tree, all of those stuff went away. This has been manufactured. This was QE1, QE2, QE3, QE4. This is Operation Twist. This was COVID, and then more QE. This is what everyone has been sucked into. Jack in the Beanstalk type stuff. This is a bubble that was manufactured and engineered by the fraud, by the waste of the politicos on both sides of the aisle, all sides of the aisle. Now, all we've done in March is this little bit. This is now April. This little red box we have drawn here some time ago. The likelihood is that the S&P, it would be healthy that this bubble retrace 50%, bringing it down to 3,375. It would be technically healthy for the market. It would not be healthy if one just bought the market up here. It won't be healthy if you are in retirement or near retirement and hoping for this Jack and the Beanstalk to keep growing to the moon. Now, it's always possible. You could say, Don, it stopped here and went higher. It stopped here. It did it about 6 or 7 times, buying the dip, and it kept going. It might stop and do that again. It might. But then again, if this is the .com, if this is 08, and some people say that the valuations, we will say the valuations, the technicals are much worse here than they were back here and back here. If we come back 90%, we're going to be down in here someplace. Now, it may take 10, 12 months, and there may be some false starts. The question that everyone has to answer isn't what everyone else is doing. You have to think about what you're doing and where you are in the spectrum. If you're in your early 20s, you have time on your side. If you're not, you may not. The most valuable commodity of all, it is not the S&P, it is not gold, it is not silver, it is not Bitcoin, it is time. Time itself will bring you back. You can't buy it, you can't sell it, you can't trade it, You can't manufacture it, but you can waste it. So I'm not going to tell you what to do with your money. I'm not going to tell you that you should sell. I'm not going to tell you that you shouldn't sell. I'm not going to tell you to go back to the cubicle and that everything's going to be fine. We don't do that as traders. We track the money flow and we move to protect our assets every day, every week, every month, every year. We work very, very hard at this, and our members do too. If this is something that you want to do so that you don't get caught up in something like this again and take control over this part of your life, feel free to visit stockmarketcaddy.com. Be sure to explore what we call the Q School, and you're more than welcome to reach out at 813-758-8263. We wish everyone the best. Good luck.